next guest, he's a numbers guy. How does this going to all end? Please welcome to the show, Mr. Dan Geltrude. Dan, like I said, I'm in the market to buy a house. Those numbers don't look too good, do they?
They don't. And Scott, remember, it's all about the monthly payment. Now, whatever makes that up, the balance between your mortgage payment, insurance, and taxes, I don't want to say it doesn't matter, but when you're writing that check to pay for everything that you need on the first of the month, well, that's the number that you're looking at. So the problem that we have here is that these costs for insurance and real estate taxes continue to go up. Whereas the mortgage rates for most people, they're fixed, so they remain stable over time. So we really have to focus in on, well, what's the impact here on the insurance and the taxes? Well, first of all, the increasing frequency and severity of these natural disasters, well, they're driving up those insurance costs. The other thing related to it is anytime we have these situations and you have reconstruction, those costs have gone up significantly because of inflation and also because of labor and material shortages. So again, the insurance companies, Scott, are going to pass these costs along to the consumer. Now, as far as the real estate taxes go, well, we all see how much the prices of homes are going up, or the value of homes. So those rising home values, well, that leads to higher property taxes. And finally, local governments, they're relying on those property taxes for funding schools, for infrastructure, and for all the services and that they provide. And that's also increasing that burden.
I got firsthand experience with that coming out of Chicago. I mean, there's no money, the consumer doesn't really have much money left in savings. I mean, they've been depleted, especially in the state of Illinois. But the only place that the government that can come after any wealth, any sort of wealth, is going to be that real estate market, real estate taxes. And so that they're very, very high there because that's the last bastion of any money that the state can kind of get their fat hands on, number one. Number two is, this is an interesting fact. I've looked at it all year last year, but the Fed has been doing their best that they can, they say, to keep inflation down and try to right this ship. But there's one thing that's out of the Fed purview that they have no control over, but it is a very big deal, and that's insurance, right? They can't do anything about our health insurance. They can't do anything about our auto insurance, and they can't do anything about our home insurance. And slowly but surely, those are becoming the biggest costs that we face on an every day as an American. So what's outside the purview of the Fed is sometimes one of the most biggest things we have to worry about. They can't do anything about it with all of their tools that they have in the toolbox. So that's going to be something I think that's going to be a bigger story going forward, because you just mentioned all the things that are happening as far as natural disasters and the weather. But it's gotten to a point, some places, Dan, I know in California, you have one or two insurers just pull up stakes and leave.
That's right. And that's what's happening is you have different parts of the country, Scott, that are literally becoming uninsurable because there are so many floods. That's primarily the big thing, right? Because fires, generally speaking, from a homeowner's situation, most of the time is isolated. When you have a flood, Scott, that impacts a huge area many times. And there's just not enough money to cover for all those damages. And you continue to have these floods. So what happens? If FEMA, right, the insurance there, continues to have to keep funding and funding. So at some point in time, there's not money left. And private insurers are saying, no, thank you. We can't afford the losses.
And I'm going to head off the climate alarmists real quick here, because to their point, we're building in more and more places we shouldn't be building because we have a shortage of homes, right? So when you look at the damage amounts, those totals are distorted by the fact that we're putting people in homes in places that we would never have usually been building on because of the demand. So a floodplain, right? We're putting homes on floodplains that we never used to do. We're putting homes in dangerous places of fire that we never used to do. And the insurance companies can see that. And why would they want to be at the end of the line there to take all the brunt of that? You got about 20 seconds.
The only way they're going to do that, Scott, is they have to charge really, really high premiums. So either way, whether it's the consumer or the insurance carrier, it just becomes too expensive. How we solve this, I don't know.
And if you take a look at those insurance costs, what's that going to do to the price of the home when you're trying to sell it?
Exactly.
Yeah. All right. This is going to go on and on. for sure next year, maybe even longer than that. I appreciate you coming on, Dan. Have a happy new year, Dan. Great. We really appreciate all the content you've given the Cow Guy Close all year long.